I'm Pat Thurston, your host, and I want to talk with you about this financial scandal. It's the Libor scandal, and I have a feeling that a lot of people who are listening to this program don't know what the Libor is or what this scandal involves. And maybe that's what explains almost a yawn in the United States when these revelations were made. Yet in Great Britain and in other nations across the pond, it seems like there is hell to pay. Libor. Let's talk with Robert Scheer. Bob Scheer is the editor of truthdig.com. He's a columnist for the San Francisco Chronicle. He has written for the Los Angeles Times. He has written anywhere there's a decent, respectable publication. Bob Scheer has had articles in that publication, and he joins us now on the Pat Thurston program. Bob, thank you so much for joining us this afternoon.
Okay.
I want you to tell us about Libor. This isn't my understanding. It's the London Interbank Offered Rate. And as I understand it, it's an entity that was created to provide a different basis for establishing interest rates rather than just the government. Is that right?
Yeah, look, when you go get an adjustable rate mortgage, it's dependent upon what is the value of money. What are you going to base it on? And about somewhere between 40 and 60% of those mortgages are based on this Libor. Why? Because London was thought to be the center of international finance. It was thought that their estimate of the cost of money, what the banks would have to pay to borrow money, was the conservative standard, and you're usually paying something like 2 or 3 points over the Libor on your loan, that they would be able to come up with the most accurate figure. And over the years, that became the international standard. It's what's used in the United States. You're wrong in the introduction to suggest this is an English problem. This is an international standard, and about $350 trillion of sort of financial bets and swaps and everything are dependent upon it. And there's a $700 trillion derivative market that is connected to it. At the heart of the whole thing is something you and I have discussed a great detail on your shows, and I discuss in my book, The Great American Stickup, which is the derivatives market and the swaps connected with them. And it shouldn't elicit a yawn, because the people listening to your show, their lives have been messed up in a grand manner by these derivatives. And these derivatives did not exist in the analysis of Adam Smith. They were not part of the history of capitalism. They have nothing to do with the original conception of capitalism. What they are swindles. They're scams. They're rackets. They're houses of cards. And they have, as a defense, the kind of thing, we're just hedging debt. We're just providing security. And somebody pointed out, when it's like plumbing. If plumbing works and you've constructed the pipes correctly, you don't notice plumbing and it elicits a yawn. But if plumbing is done in a lousy way, you know a lot about it, and you'll talk about it, and you'll smell it. And what we're doing now is we're smelling what has happened with the destruction of this system. Because if this stuff goes haywire, we all pay. Pension funds are connected to it, your retirement is connected to it, your housing is connected, and the big banks are connected to it. And what happened here, really, the main signal came from our own Justice Department, slapping that $450 million fine on Barclays, a bank run by an American banker, used to be with Credit Suisse First Boston, who now has been running Barclays. But the stuff is in the hands of all the banks. Citi Bank is involved. J.P. Morgan Chase, they're all involved. And
so did these guys? They got together and they falsified what they were lending at?
Yeah, what they're doing is these derivatives, like with the housing subprime scandal, they're based on other stuff. They're derived from other stuff. So a lot of these bets, a lot of these packages are putting together estimates of where interest rates will be and what is the value of money. And then there are bets made upon bets. That's how you get this huge amount. And then there are false insurance policies taken on these bets, these swaps. And so at the heart of it, there's supposed to be something you can rely on. And what you did is you had these 16 banks, and they would give an estimate of what it cost them to borrow money. And then there was a formula worked out for trying to throw out the most excessive cost and the least and come up with a compromise figure. And what happened, as has happened generally with the whole derivative market, this system was set up to make it very easy to game. There is no regulation that really matters here. This is all over-the-counter stuff. That's the heart of the whole problem. It's a scam, and the idea was, and it happened all with the radical deregulation of the financial industry, is these guys know what they're doing, they have checks and balances, you can trust them, and they will operate in an adult, proper fashion. Well, just the opposite has happened. And in fact, the guy who's, right now on the hook, but there will be others, Bob Diamond, who is the head of Barclays, actually in January of 2011, this guy testified, he said, quote, "There was a period of remorse and apology for banks. I think that period needs to be over." This is the guy who then, a year and a half later, is apologizing all over the place, and, as the head of Barclays with this thing exploding. And what is really scary about it, and I'm sorry if it elicits a yawn, but people better wake up, is this stuff is just like, some firecrackers go over here and go off there, and suddenly there are real explosions.
Right.
And if we lose confidence in this banking system, and we have every reason to have no confidence in it, because these people are scamming it, and with their scams they make enormous amounts of money. This guy made $20 million a year for doing this stuff, and you can't trust him. You can't trust that any of it is on the up and up. So it's like you go to a heart surgeon or something, and if you don't trust them to actually know what they're doing and doing it in a responsible way, you're going to die. And at the heart of the whole financial system, you've got these swindlers that have been playing games to profit themselves, and suddenly you find out, wait a minute, the thing leaks. It doesn't work. And
they seem to keep doing it. Hey, Bob, let me ask you, at the beginning, you were talking about adjustable rate mortgages, the ARMs that are tied to the Libor index. Is one of the reasons that they would want to falsely say that the rates were lower, to use the lower rates, did they use that on consumers to try to pull them into lower interest rates, and then they got jacked up, and that's why some people were unable to afford the mortgage anymore? No. The main reason they were lying was, in the case of Barclays, they've admitted this. They've admitted that the charges against them are accurate. And what they were doing is trying to pretend that they had greater stability, far greater stability than they had. Because they actually, if they had to go, and we're not talking about the money they got from the Fed and, various governments to bail them out. Right. But if they had to go into the open market at that point, and this has been going on for a good, this whole thing was revealed in an important Wall Street Journal expose 4 years ago. Yeah. This is not something that we haven't known about. It's just taken that long for the Justice Department and their equivalent over in England to actually, get the emails and investigate and see the rot at the heart of this thing. And we're only at the beginning stage of that kind of expose. But the thing that was driving it was the banks wanted to show that they were much more solvent and stable than they were. And so they were lying about the true cost of their having to borrow money in the open market. That's where the deception begins. As far as keeping interest rates low, yes, they have a stake in it because they're holding a lot of very bad mortgages that are adjustable in those packages. And if the interest rate would go up, that would be disastrous, so they had a stake. But the real victims here are the people who have pension funds. You have got cities like Baltimore in big trouble because they have own these packages that are false. And so the consequence really is for everyone. If the markets are unstable, if you can't trust this data, if these contracts don't mean anything, and that's what's going to be happening over the next months. We're going to find out it wasn't just Barclays, it's all of these banks, and they have been skimming and hustling, and they're going to have to pay back, and there are going to be endless lawsuits about it. And what you have to understand, Pat, is this isn't like people make something, okay, you got a company like Starbucks or Apple. I mean, they actually make things, and people have to make the cappuccino or make the iPhone somewhere, and they have to deliver it, and it has to work.
We're talking about financial gimmicks. It's puffed up with air. It's derived from something else, and something else is derived from that, and it can be totally synthetic. There may not be anything at the basis of it, and then you get a phony insurance policy on it that no one can back up because they haven't put money. So you got this enormous, gigantic, bubble.
Yeah, Bob.
Or house of cards, and what is really scary now? This is right now. This forget the economist at MIT, but he put it correctly. So this is the biggest financial scandal in human history. The dimensions of it.
Yeah, Bob. I need to interrupt you. I've got to take a break here, but let's come back and pick up right from there. I also want to talk about Joseph Stiglitz, who says it's time for bankers to start going to jail. That until we do that, no changes are going to happen. Bob Scheer is my guest, and again, his book is called The Great American Stickup. It will give you a whole lot of information about how all of this came to pass. 808-0810 is the telephone number. I'm Pat Thurston. You're listening to KGO.
Out of the cupboard, you boys and girls, London calling. Now don't look to us, phony Beatlemania.
Pat Thurston. Robert Scheer is my guest. His website is truthdig.com, and his latest book, I think it's your latest book, is it The Great American Stickup? Is that your last book, Bob?
Yeah.
Yeah, it's a fantastic book, and
it's unfortunately accurate and up to date.
Yeah, well, we keep a copy of it here at the radio station because people refer to it so much. I mean, it's just a really, really terrific book. As we went out, I mentioned Joseph Stiglitz. Apparently, these are things that he's been talking about also for way too long. And he says the only way that you're going to really start getting some sort of accountability and curb the abuses that are taking place with these banksters is to start jailing them. Do you think we're ever going to see that?
Well, I think the power of their money is so overwhelming. As I say, in what I write, I say these guys get to change the law before they commit the crime so that it's no longer illegal. And that's what they did starting in the Clinton years. The Republicans have wanted to do this for ever since the New Deal and Franklin Delano Roosevelt, because that's what caused the last Great Depression. We didn't have sufficient rules of the road, and these guys could do anything they wanted. And then Roosevelt came in and he put some rules of the road that said, okay, let's not have another depression. And then, the Republicans started pushing deregulation, and Clinton, who was ever the opportunist, seized upon that and said, hey, Democrats can do that as well, and that you had the financial deregulation of the 1990s, and then critical, in 2000 you passed something, the Congress passed and Clinton signed, called the Commodity Futures Modernization Act. And the Commodity Futures Modernization Act of 2000, which was done without hearings in Congress, without serious evaluation, because the bankers wanted it, said none of these financial gimmicks. Titles 3 and 4 of the Commodity Futures Modernization Act specifically say none of these collateralized debt obligations, credit default swaps, none of these things will be subject to any existing regulation or regulatory agency. And now with Dodd-Frank, we've had a very minor attempt to readjust that. But the fact is, the bankers were given a blank check. Go write what you want, do what you want. You are the adults watching the store. You know what you're doing. You're sophisticated. Lawrence Summers, who was the Secretary of Treasury of that time, said, they are the ones who understand this. In fact, he didn't understand it. Right. And the CEOs of these top banks have testified one after the other that they don't understand it, but it's too good to check because the money is good. It's a swindle. And people don't look inside these packages, these bets. And so you hear a figure, there's somewhere between $700 and $900 trillion.
That number is incomprehensible.
And nobody can grasp that.
No.
What does that even mean? These are bets upon bets upon bets, which when they explode, we go under.
Yeah. Yeah, and as you said, there's as this unravels, undoubtedly it's going to expose a lot of major bankers and at least one regulator. There was one in Great Britain who's been attached to some of this. But it seems as if even though they've rewritten the laws, it does seem like there's fraud afoot, Bob. I mean, they misstated what they actually were borrowing the money at in order to falsely bring these interest rates down.
Absolutely, and they will throw people to the wolves. This is what Bob Diamond at Barclays said. He didn't know until a few weeks ago,
right.
And he's a shock. He's physically sick.
Yeah.
He was so upset. And that's nonsense. The people working for him, and he came out of that whole division. This guy goes back to Credit Suisse First Boston, that was very big in all of these derivative trading and everything. This guy, that's what he came out of. That's why he was that successful at Barclays. And yet the top guys always turn around and say, we didn't know.
Right.
And they're very good at covering their tracks. Now, sometimes they get caught. In the Enron scandal, the big shots couldn't say we didn't know about these emails because some of them went to them.
Right.
But they've gotten smarter over the years. They say, don't send me those emails. Send them to each other. And the guys who send the emails, they're in trouble because, they've said, hey, we're lying and join me in this. And, the emails are devastating. And they show a conspiracy. There's no question about it. They show fraud. So people will go to jail on this. The deal that was made with Barclays, however, was not to go after the bank itself. And the reasoning, I think, of the U.S. Justice Department is they want Barclays' cooperation in revealing what the other banks did, because this is, after all, something that at least 7 or 8 other banks were involved in. Yeah. Looking over their shoulder at what the other guys were doing and feathering their own nest. And so, this one will not go away. This one is just too big. And there are too many people who have been hurt by this. That's another thing you have to consider. When you have cities going bankrupt because they have this junk and have bought into it, when you have pension funds troubled and have lost big money because of these kind of swindles, you have victims that have lawyers. And they can come after you, and they can demand to see these emails and expose this. So I think we're in for a whole season of examination of just how evil this has been. I don't think this is going away anytime soon.
You were talking earlier about how there's not like a real product here. There's not something that's actually being offered. This is a financial services. And these numbers, like $700 trillion, is that real money? I mean, is there actually that much money in the world?
No, there isn't. It's incomprehensible because it's, of course, many times the gross national product of all of these countries. What it is, if you sit in Starbucks there on Pacific Avenue in San Francisco, and you got people talking about, I've done it, right now I happen to be in San Diego, but I've been around where you are, and, people are coming up with things, a different way to do something, a different way to write a program, a different way to paint a house, a different way to make coffee or a healthy organic drink. And then they try to market these things, and they get venture capital to back it. And, at the heart of it all, there's got to be a there. There's got to be something that's going to be useful to people so that they'll want to purchase it. In the banking world, it's quite the opposite. It's make something so opaque, so obscure, so beyond comprehension, and then argue that only a few people understand the mathematical formula that's on the basis of it. And then you got this house of cards developed. Right. And the money flows. It is a Ponzi scheme. The money flows, and as long as the money flows, and you get the PR people who will justify it, you get the lawyers who will justify it, and you get the academics who will justify it. Right. You go to your major universities, your major law schools, your major business schools, and those people all sat by and said, hey, this is wonderful. Right. And I would point out to people 4 years ago, the Wall Street Journal had an article on this, an expose. It was well publicized at the time, saying, this was the headline, May 29th, 2008, the Wall Street Journal, study cast doubt on key rates. Quote, major banks are contributing to the erratic behavior of a crucial global lending benchmark, a Wall Street Journal analysis shows. And it says the rate was being manipulated, quote, to act as if the banking system was doing better than it was at critical junctures in the financial crisis, close quote. That's the Wall Street Journal 4 years ago. Why are we just now getting the emails and learning about this? These people have been allowed to continue to swindle for 4 years. And it's because they have the lobbyists, they have the lawyers, they have more lawyers than the SEC.
So even after that article exposed it, it continued?
Yeah, after that article exposed, nothing happened. Nothing happened. The investigations began, but these lawyers can stonewall. You have to understand, the Commodity Futures Trading Commission has a very small staff, and they don't even have much legal power anymore to monitor. The SEC lawyers are way outgunned by the banks. And here you have a guy like Bob Diamond who could testify, a year and a half ago, that the bank should feel no remorse. The problems have all been solved, and he was testifying to justify huge bonuses, and they get away with it. Why? Because they got so many people on the take. Right. They got so many very bright people. You got to understand how the corruption that abounds here, that you have your really brilliant people who are in PR and law and business, they have their MBAs, and they all give this line, no, this stuff is great, there are no victims, this stuff is wonderful, you just don't understand it, this is what fuels the economic engine. So you have this big lie that people, go along with and propound. Why? Because they're on the take. They are getting paid. Right. You're professors, you're journalists. You know what? I mean, so many people are on benefit from the swindle, and then, of course, when it explodes, people are, not me, I didn't know, how would I have known? It's an incredible cesspool of corruption.
Well, hopefully.
That's the only way to look at it.
Hopefully, with the size of this one, I mean, maybe at this point we're actually going to do something to try to put, move back toward Glass-Steagall. I mean, I've even seen conservative economists in some of the newspaper articles recently who are saying, I hated Glass-Steagall, but it sounds like we really, did the wrong thing. We need to move back toward it. Hey, Bob, we're out of time. Always delightful to talk with you. And again, I would tell people, pick up the book. It's called The Great American Stickup. And go to the website, truthdig.com. You'll always find something there that you did not know previously. Thank you, Bob.
Thank you, Pat.
You bet. Robert Scheer. He's a columnist. He's an author and writer, and just a very brilliant man. I'm Pat Thurston. We're going to check in with Paul Rogers. He's in the KGO Radio News Center with this update. Paul, it is you, isn't it?
It is I. Thank you,